For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today, reviewing the New York Open trading 1 hour a day. A lot of emails and questions the last few days. Taken a bit of a break over the weekend and enjoyed myself. But a lot of questions, a lot of people emailing and telling me that there isn't a process. It's all over the place. Too many videos, all these things. And as much as I go through the same steps in each video, there seems to be people still struggling. And we're going to do a separate video on the currencies. Specifically today talking about oil, gold, and the indexes for the New York session. Obviously, the same process would apply for me in the London session, just changing the time to the middle hour, the 3 a.m. New York, but specifically talking about New York. And one of the things that is important to me about trading New York is that by the time I come to the screen for the New York Open, the majority of the information is on the table. Now, some days there's going to be bigger moves on the euro, pound, maybe some of the other crosses in the London session. And sometimes we're going to get large moves on gold indexes and oil in the London session. But I don't trade London. I'm in bed. And the odd time, maybe a day 3 setup, I might occasionally get up and see if it's setting up as the daily, weekly template are setting up, day 1, day 2, day 3. We'll talk a bit more about that as I received quite a few questions about that as well. So I'm just going to review 9:30 a.m. New York time is when I am looking for my setups. So again, London and Asia are already trading. In that first hour between 8 and 9 a.m. New York time will establish whether I am going to have a trade setup or if the market continues to expand the range or if we have a London high and low setting up, and there may be occasionally trades in that first hour, especially on gold. But we can get them on the indexes and oil as well. And again, that comes back to understanding day 1, day 2, day 3. But what's really simple to reproduce is, especially with oil, and the indexes, because specifically at 9:30 a.m. New York time, those markets open up. The physical futures markets open up. And so there tends to be an explosion of volume there. And again, depending on the template of the week, day 1, day 2, day 3, and the setup, there can be some very, very large moves for, 5, 10 to 1 opportunities, maybe 20 in some cases, especially with the S&P. My focus is the high and the low of the day. Now, if we're inside when these markets open up, I'm going to wait for them to go to the high or low of the day. Now, there's a lot of confusion for traders determining where the high and the low of the day is. If I come to the screen in the New York session, London may have made a lower low and a lower high. That becomes my new reference points for the low of the day and the high of the London session, which is the new high of the day. So these are things that you'll have to learn by studying your charts and understanding the importance of each session throughout the day. And then not just trying to trade from the high or the low, but determining if indeed there is actually a trading setup. Trading setups will be either reversal trades, trend trades, or high-low, low-high trades in a trading range. That's it. Those are the only 3 types of trades that I am looking for. And then based on the template, the setup, high or low of the week, that will determine as to whether or not I have a session scalp Could be an explosive short squeeze. Could be an explosive high of the day, high of the week, long squeeze. It could be a trend trade. They may be sizable depending on how that template has set up over day 1, day 2, day 3, Friday, Monday, Tuesday, any of those things. Every template will be different. There is no cookie cutter because we have setups that will evolve over 2 and 3 days, typically for larger moves, and then also 2 and 3 sessions for larger moves in the day itself. And then it's as simple as having an entry, a stop, and a take profit. That is as simple as it gets. Once I'm done that, I may have a second trade or I may have a couple of trades happening. That's it though. When I'm done that hour or in that third hour, whatever that may be, and my trades are done, I'm done and I walk away. We've talked about this in numerous other videos. Most traders will continue to trade. They'll take impulsive trades. They'll get overconfidence, or they'll be underwater on a trade, so they'll want to try and get back to even or get to the high water mark. Or they'll over leverage in an attempt to get back any losses, or they've made significant gains and they'll continue to trade larger through elation, or they'll continue to revenge trade out of anger and frustration. So I'm looking for setups that repeat over and over and over again, and I just gradually over time have continued to scale those up in size. You are not missing out on anything. They're going to happen again tomorrow, Wednesday, Thursday, Friday. They're going to happen the week after this. They're going to happen the month after this. So the number one thing you want to be doing is acting in your own best interest and not doing any damage or self-sabotage once you have done the flawless execution of the trade that you've taken in that session. And then having an actionable trade review process. Okay, how did you trade today? Did you execute perfectly? Did you perfectly execute and size into that trade? Did it play out as you expected? Did you chase a move? Did you get in too early? Did you oversize on a poor quality setup? Did you size perfectly on the setup? Did you manage your risk, and did you exit the trade as planned and lock in as much profit as possible? Could you have locked in more profit? Could you have taken the majority of that trade off and left a trailer? What type of setup was it that made you determine how you were going to manage that trade? And then in live time, how did you do it? Now, the key with the actionable trading review process is, what are you going to do better or different next time that will make sure you don't do the same thing again, assuming that you had identified areas that needed improving. So the whole purpose is not just to review the trade, take a screenshot, put notes on it. It's what are you actually going to be doing differently that will make a difference in the results of your next best trading setup. So the actionable part is key. It's not just having a review process. It's what are you actually going to be doing different in live time when you're at the screen taking the next trade. So let's take a look at today's trade. Now, my main focus coming to the screen today was oil, gold, and the indexes. We're going to look at oil and the trade that I took on oil specifically, and we will look at the other three markets and as to why I chose oil over them. And then I will also be doing a different video talking about the currency setups. So looking at oil, I have the major quarter levels. Now, I've talked about this before. These are 250 pip boxes. So when I first have my charts up, I'm looking at major quarter levels because I'm just looking at the pattern of the market on the day and then identifying if it's in a consolidation, if it's broken out of a box, if it's establishing any sort of recognizable template on the day itself. Now we're on Monday, day 1. We have a high of the week on Thursday. We essentially, for all intensive purposes, traded as an inside day on Friday. And then we broke down today on Monday. So we had a high of the day in the Asian session. That became a lower high as the day evolved and we broke lower in the Europe-London window. So if Asia sets the high and low of the day, this is my initial consolidation. However, when the Europe-London window opens up, we made a lower low. And then the market proceeded to auction back up to the high of the Europe-London session. And then from there, the market broke down and made new lows. Now, this little subtle higher high becomes my reference point for the high of the day because we've gone lower. Now, I've talked about the three peak patterns before. And the three peak pattern is when we are inside, away from the high or the low of the day, and the market over the course of the day makes three peaks. Peak 1, peak 2, peak 3. And it could be for an explosive reversal back in the other direction. Peak 1, peak 2, peak 3. Short squeeze. One example could be the other way. We could have a market that comes out of the low over the course of the day, Asia, London, New York, or London, New York, breaks down for a big move back towards the low of the day. Now, I'm going over this because I've received a lot of emails from people who have looked at one or two videos and they say that there's no process and they're complaining, but meanwhile everything's established in most of the videos. So I want to be very clear on this video. Then we've also talked about we can have day 1, day 2, day 3 coming back the other way. We can have day 1, day 2, day 3. We can get a break in structure, and we can have large moves over the course of the high of the week and the low of the week. So when I'm inside and the market has come down over the course of the day and it's making new lows, just coming back to the essential understanding that sometimes Asia will make a high of the day and London might make the low of the day, and then we might get a trend trade. We can get a market coming from the high of the day, coming lower, coming lower, coming lower, and jamming in for an explosive short squeeze, and then a market that gradually resumes its down move. There are different scenarios, but the thing that I am looking for is the setup when I come to the open of the market. And so today we're inside on day 3, and the market has made lower lows. And we had 1 peak, 2 peaks, 3 peaks, and at the New York Open we had a short squeeze for the explosive move back through the lower high of the session, and then the continuation back to the high of the day. So we have day 1 on Thursday, day 2 on Friday, and on day 3 we're at the low, and we've broken the low. So again, we made a lower high, and there is our new reference point for the high of the day, and there's our first peak. The market comes down to that and goes back up to the high before dropping down and going vertical, and I start the count again because we're coming into the US 12 candle window. I'm down low. There's either going to be a trend trade for a continuation, potentially maybe somewhere down in the breakout trade from last Wednesday, or we're going to be getting some kind of setup that will target the lower high of the session, the low-hanging fruit, heading into the US window. So we have our first pullback, 1 push, 2 pushes in the first hour. When I zoom in onto my 1 minute, and again, as I've explained before, I use the 15 minute to establish my thesis, the levels, and the pattern on the day itself. Then I go to my 1 minute chart if I feel that there's a setup, and then I'm looking for the entry and the timing and the level at either the high or the low of the day. Now, the low of the day as we head into the London window, the US window, is the low of London itself. This, we'll break this little box out here. This is the high of where that lower move down began. So we've talked about front sides of moves, the back side. This front side move began up top. That is my reference point. And again, we can scroll back and just look at the high of London as we broke down in Asia. We made lower highs. London stop hunted up and made a peak formation high. They traded back up into that. That's my new reference point for the high of the day in the London session. There's the high of the day, and there is the low of the day. Right at the beginning of our US session 12 candle window, the market breaks that lower high and then continues to expand the range on the downside. So obviously we broke out right off the bat. They go vertical, put 25 into those traders. First hour makes a high and a low. You've heard me repeat that phrase. This is prior to the New York Open. Now we're at the low of the day. We've broken the initial low that was there. We've got an engulfment and a pin hammer in the first hour. Thesis is that this level may hold. However, my timing window is 9:30 New York, because over time, and if you follow these markets long enough, you understand that when, lo and behold, no matter what, when these markets open, they seem to find their way back magically, defying all technical indicators and logic and everything else, to hit stops, expand the range, and do whatever else they're going to do. So, again, we have a low of the day and we have a high of the US session. This is my new high of the day. We broke structure, we've broken the lower high before dumping down into the low of the day. When the New York market opens, they've come down just prior to the open of this market into the low of the day. We have a little engulfment just prior to the 9:30 New York time opening. This very first minute of the New York session. So again, we have a low of the day in place. We have a low of the day in place at the beginning of the session. They break out of the low and pull back. Thesis is that maybe this double zero level is going to be significant. Now again, let's go back and look. We're at the low of the day. We've had 3 levels of drop. 100, 100, and down into the third 100 pip box. So we're 200 plus pips. We're in Asia, London, and now we're at the New York window open. And in that New York window open, we have 1 push, 2 pushes down to the low of the day, and right at the New York open, we get a third push into the low of the day, into the first mouse, and a reversal pin hammer the second minute. Now again, this is something that when this is all setting up and trading cleanly like this is exactly what we're looking for. This second bar, it's possible they could have come right down 1, 2, 3 before reversing, but they didn't. This is the third push into the low. Bull pin hammer. Now I had an excellent question from a trader or comment. He said, I didn't want to take that trade. It was a 30 pip candle. And that's a great acknowledgement on that. You can always take a trade and just adjust your sizing with the same stop. So for example, it might be a 30 pip stop for the full length of the candle, so you could reduce your position size to keep your risk controlled the same. My thesis always is that when we get a short squeeze setup, it's going to be an explosive move, meaning that the very next bar should explode away from my entry position. Now, truth be told, before this candle's closing, I'm adding positions in. But at the close of that candle, I will not do anything else. And in most cases, my stop will go below the open of this bar. Thesis is that this trader who shorted that right at the open, right here, is trapped. This is a short squeeze setup. This market is going to explode. These shorts on the first minute who are chasing the move potentially back to the low of the day are now caught. So my thesis is that my stop can be as tight as the couple pips below the open of this candle, which keeps my stop around 20 to 25 pips from full positions. And that if this explodes, this market will go right back through not only the lower high of the session, but continue its way up to the high of the London session itself, or at least into that upper quarter near the high of the session, which is why I targeted the 150 pips and I don't wait for it to go all the way up. I targeted 100 pips on this move. Again, explosive move, just a decision I made. So again, short squeeze setup, you can still control your risk, but the timing of this, what's great about this is that I'm just waiting for 9:30 New York time, and I'm either at the high, I'm at the low, or I'm inside. This is already at the low. You'll notice the low of the day prior to this market opening is right here at double zeros in the London session. That is the low of the day. They trigger breakout traders right off the bat before going vertically and breaking the lower high. There's our break in structure. They come down one more time and break the low of the day before reversing, hitting stops on the first mouse. Now again, our timing window says 9:30 New York time. So I want everybody to hear that one more time, 9:30 New York time. What that allows is the first hour now to make a high and make a low at the low of the day, and then determine how they open the market and how it behaves at the open itself. They trade back down into the low of the day, 3 sessions down. We have 1 push, 2 pushes, and 3 pushes down into the low of the day, 1, 2, 3, for an explosive short squeeze, 100 pips, over in 15 minutes, that was scalable into, done, walk away. Now, other traders have waited for this to come to the high of the day for a potential short trade back down. Entirely different setup, different choice. My setup is looking for that trade in that first hour, if it's set up properly, for an explosive vertical move. Now, if we take a look at the S&P, again, how I filtered them out myself. To review oil, day 1, day 2, day 3, 3 peaks down, 3 pushes into the low for the explosive short squeeze vertical trade. The S&P, we had a vertical move on Friday that took out the high of the week, that broke down back inside of that high in the London session. So again, if my thesis was 3 peaks down for a vertical move back to the high of the day, we had the Asian peak, the London peak, and then the open of the US window, and the reversal back where they have now just traded back into that lower peak from the London session. They've taken out the high of the US session. Again, I didn't identify that as good a setup as the oil trade itself, but we have our 3 peaks inside. The only trade inside was continuing outside of the range. So again, if you were trading the open of the New York market, you would have been looking for the vertical continuation move outside in line with the existing short trade of the day. Lower peaks, they opened inside, vertical move down into longs, higher level longs from Friday night's US session. Okay, NASDAQ, we had a break of Thursday's high on Friday. That market broke down during the session today, took out the low of the Asian session and made a lower high. So again, thesis, if we're looking for 3 peaks inside, we could call Thursday day 1, Friday day 2, 3 peaks inside for a continuation back up to the high of the day. We have our second peak in the London window, but we've also pulled back inside the high of Thursday. So this breakout trade now, has reversed and failed back inside. So I repeat this over and over again. There are 3 things that markets do. They trend, they break out, they pull back, and they trend. They break out, they pull back and reverse, they fail, false breaks, or they stay sideways in a trading range. Those are the only 3 things that markets do. So we have longs on Friday higher level longs in Friday's session that this market has made 3 lower peaks. The trade inside was to continue short at the opening of the New York session on the NASDAQ. Gave a nice 100 pip move. For traders who were trading right at the open itself, the only trade was to continue short with this market. So we have a breakout, a pullback, 1 push, 2 push, 3 pushes, pin hammer, and again the 15-minute rotations. The end of the 15-minute bar gives traders a short entry with the pin hammer as a 1-bar stop, in line with an existing downward moving market for a nice 100 pip creeping trend back to higher level longs from Friday's session. Now, I also thought gold actually gave a good trade. Wasn't quite as clean as oil, and I didn't feel that it was as ideal, but it still gave a nice 50 pip trade from the low of the day. And on Monday, this is now our low of the week as well. We broke down. We had a market that dropped strongly on Friday. We had trap volume up high. We have shorts in the market. They broke Thursday's low. They also broke down today in the London session. So again, I talk about consolidation, the U.S. session high of the day. I'll just bring this back up. Identifying your consolidation, U.S. session high, Asian low. So we have a 50 pip box, but we have stops below in the next 00 box from the previous low of the day. They broke down in the London session. So again, if we have our 3 peaks, we look at the low of Friday. We have 1 push, 2 pushes, 3 pushes. They come back up to the high at the open of the Europe window, little M structure, pin hammer at the open of the London window. So again, if you were trading London, high of the day, low of the day, high of the day opportunity to sell high above the quarter level. So again, traders, when they say, where do you get in? I'm identifying the number level somewhere above 25. We've hit the stops. We already have our high of the day locked in. The market drops through the low of the day from Friday. So again, now we have a lower high from the London session, which we can project across as our new high of the day. That's the lower high of the London session. And then we look for our 3 peaks. However, this market came back up and made a break in structure on the inside. Broke the lower high on the inside before dropping down. And so then when that happens, again coming back to the 9:30 New York time, potentially going to count 3 pushes down before we get a reversal. So there's some traders that shorted the collapse into double zeros in the first hour. Thesis to trade back to the low of the day. Again, different strokes for different folks. This is a high of the day setup, a great trade. Market peak formation into the high of the day that was locked in, and then started to proceed to work its way back down. So again, just talking about high of London, low of London, and then the market proceeded to work its way down through the low of the day before engulfing 3 minutes in at the low of the day into the London window. So we're at the low of the day. The market breaks out at the New York Open, puts in our V bottom reversal. So again, low of the day in the first hour. The first hour puts in the high of the day and a low of the day. Then the market continues to go lower into the New York Open. It hits stops, triggers breakouts, and engulfs and reverses. Now, we had a bit of a volatility right around 15-minute mark after the open. The engulfment itself, and then the pin hammer continuation from the low of the day back inside of the low. But this little gap, we saw some volatility. I'm not sure what news happened. It didn't show up on oil, but it did show up on the indexes and on gold before working its way back up to the high of the day. Now, a little different setup than oil. Still 9:30 New York time, breaks out, reverses, engulfs the end of the, or towards the end of the first 15-minute bar, we get our little pin hammer on top of the engulfment, locking in the low of the day, knowing for traders who struggle with this, I'm going to repeat this phrase: nobody gets a free lunch. The low of the day is locked in. They've broken outside, triggered breakouts, hit the stops. We have low-hanging fruit. We've broken the previous day's low of the day. We have shorts in the market from the first 15 minutes. Nobody gets a free lunch. This is a reversal setup. 15 minutes at the low of the day at the New York Open after the engulfment at the end of the 15-minute bar for a 50-pip move back up to the high of the day. This little coiled consolidation was an excellent opportunity for traders to add into an existing winning position. Bull flag squeeze for a nice vertical continuation in the middle of the move. So again, the setups are going to repeat over and over again. London puts in a low of the day. They get traders shorting it back into the low. An opportunity for 25 to 50 pips from that first 15-minute retest inside of the lower high of the London session, and then the explosive New York reversal trade back up to the high of the day. Just to repeat, everything's here, right there. There's the steps, 9:30, high of day, low of day. It's either a reversal trend trade or you're in a trading range. It's either a sizable move or a scalp, and that can depend on the high and low of the week and the daily, day 1, day 2, day 3 types of setups. Then you're taking an entry, placing a stop, and a take profit into the market. Once that's hit, or you get time decay and you exit the trade, stop trading. I'm done. 1 hour a day. I don't try to keep trading. I don't try to get more, get less, get even, get revenge, any of that stuff. And then I review the trade itself, whether I entered in as well as I could have, if I could have put more size on, if I could have taken more profit out, if I could have left a trailer in, or I did everything right, whatever is going to help me get 1% better on the next trade itself. We'll talk about the currencies, as there were some great setups for the US session. Obviously, there were trades in some of the other sessions. The same rules apply for me no matter which session I am trading, specifically London or Asia. The difference just being, obviously, the time of day will be different. That middle hour for London, 3 a.m. New York time, when the London market's open. And typically, depending on if it's a daily, what day of the template it is, often day 3, you can get a blow-off move in that first hour. But typically that second hour in the Asian session, the 9 p.m. New York time currently, so I'm going to say New York time, not daylight saving or anything else, will often offer traders an opportunity in that middle hour. Again, high of the day, low of the day opportunities for 25 to 50 pips. So hopefully you got value out of today's video, traders. Keep reducing variables out of the equation. Make it as simple as possible. Understand the setups that you are looking for, and then work on yourself so that you can become a master of execution in live time. Keep it simple. Start the week off strong. We've had some great movements today, and markets are still trading, obviously, and there will be other opportunities depending on other traders' strategies in the Northern Hemisphere. Keep it simple. Have a great week, and may the markets go with you.